want to talk gold. We've got gold rising again after closing above 1,100 for the first time yesterday. Take a peek at where we've got gold right now today. You can see it is up slightly year to date, up almost 25%, $1,102 an ounce right now. And take a look here at silver, slightly down, but up 53% and change year to date. So are metal stocks worth investing in right now, or have they pretty much seen the bulk of their gains? We want to ask Tom Lydon, editor of EDFtrends.com, also Art Hogan, managing director at Jefferies. Good to see you guys.
Nice to see you.
So Tom, you're a gold bug these days. Where do you think gold could actually be heading?
Well, it was just a few months ago we were saying 1,100. Now 1,200 might be right around the corner. But as you point out, is there a bubble afoot? It doesn't give you that warm, fuzzy feeling when Harrods starts selling gold bars and infomercials that late at night try to get you to cash in on Aunt Helen's jewelry. But just this week, Morningstar said that broad-based mutual funds are allocating more to gold mining stocks and to gold. And it's no doubt that the average investor is increasing their commodities positions today.
It almost seems like it's becoming, to some extent, Art Hogan, the world's new backup currency. I mean, when you look at all the trauma the dollar's been through, and then you look to gold, what's that telling you?
Well, that's exactly correct. That's the relationship we're looking at here. It's the dollar debasement, fear of inflation, hedge against inflation investment. So as a percentage of a lot of portfolios, you're seeing commodities come in and play a very important part. Gold is a very large part of that. It's very tradable. It's very transparent, and you know, the ability to trade it has certainly increased over the last couple of years, not decreased, with the different ETF products that are out there. So clearly, it's become a very household type investment, especially over the last couple of years.
So Tom, if you like gold, maybe you like other metals. I mean, in some sense, gold is cheap relative to what oil has done. How do you invest in this?
Well, you're right, Larry. Look at silver. I mean, gold's up 25% year to date, but silver's up 50%.
Yeah,
and if you take it a step further,
crude oil's up 80%. Crude oil's up 80%.
Right,
think about that.
It is. And, well, all commodities, all the baskets right around the world, copper is up over 110%. So as Art was just saying, with ETFs, you have choices that we didn't have 5 years ago. You don't have to store the metal. You've got low expense ETFs. You've got the liquidity. The choices are there, and for investors that are looking to get into this allocation.
It seems you guys are both on the same page in that you think there's a rally here that really has some momentum. So let's talk about where, as an investor, I'd be putting my money. You know, as we were just saying, gold may not be it. I mean, you look at silver, you look at oil. What are some of the ETFs that I could be looking at right now to maximize my exposure here?
Trish, I jump in on that one and just offer up that we've got a new product that's out. It's the CRBI, which is the CRB Industrial Metals ETF, just rolled out 2 weeks ago. And if you look at that, what you're getting is exposure to industrial metals. And the reason you look at that is because it's a two-play fold on valuation. You want to look at the valuation in terms of inflation and dollar debasement, but you also want to look at global economic growth. As the global economy is recovering, you saw China demand for autos, as reported overnight, up 73% in the month of October. We're seeing a pickup and a need for the industrial metals complex. We're going to continue to see that as we industrialize a lot of developing countries. So a very diversified way to play this is this CRBI product that we just rolled out, and it's got 35 companies involved. It's invested in 11 different countries. So I think it's a great way to get broad-based exposure to industrial metals.
Tom, real quick before we go.
Yeah, well, also there's some miners, and the market vector miners, again, it costs about $250 to pull an ounce of gold out of the ground. If gold's selling at $1,100 an ounce, it's pretty profitable at these levels. So don't just look at the spot prices, look at the miners themselves.
Okay, some creative ideas. Thanks so much. We appreciate it, guys.
Thank you.
Melissa, when we come